Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
Good morning.
Good morning.
Hello, everybody. Welcome me back, please.
Welcome. I was going to say, welcome back, Michael. About damn time. How was
We've
it taking
missed
2
you.
weeks
Yeah,
off?
couple unexpected things popped up. Shout out to Tim Rizzolio with last minute tickets to the national championships. I had to get up to Atlanta 2 weeks ago, and then 2 weeks ago, and then we got hit with the snow and ice. And while I was optimistic I could get out up to Virginia for a site visit of a property we have under contract, I couldn't. So we had to delay the trip, and we did that last week. So I appreciate y'all's flexibility in covering for me.
Yeah, you know what? That is the beauty of having several co-hosts, as we can mix and match.
Yes,
Yep.
There are 9 GMH hosts across the whole show. So we could have replaced you in a heartbeat, Michael. No big deal. It's fine. It's fine. Just kidding. You're not
Thanks,
replaced,
guys.
Just joking. We missed you. We missed you. Your thoughts, your insight, your commentary was all missed. And I know the listeners missed you too. So welcome back.
Well, I'm back. I don't have a Brandy rant, but we do have one queued up for y'all today. So excited to hear more.
Well, outside of the topics, before we get into all of it, obviously we have housekeeping items. So one, there's a little bit of an announcement that we're going to have on GMH in the next coming weeks. So I wanted to tease it because it's a big one. We've been working on it for a while. Shout out to 2 people that I'm sure are tuning in, listening, waiting for us to see if we're going to actually spill the tea, but they're not, or we're not. So just teasing that up there for you guys. And then a quick friendly shout out to our friends at Fido. I actually got to sit down and record with Justin, who is the CEO and founder, and he gave me such a good offer for Slick Talk listeners that I wanted to actually share the same offer to our GMH listeners because it was that good. So not only if you sign up for Fido today, you will get a free month of their bin to curb service. But if you are using a current bin to curb service provider and you switch, they will give you $50 per property that you switch. So if you have 100 properties, that's a lot of money back into your pocket. So just saying, we're going to give that same offer to our Good Morning Hospitality listeners. And without further ado, let's go to the topics. We have some fun ones, and I think we're going to kick it off with Brandy, who has some Super Bowl data with us.
Yes. Okay. So, Super Bowl this year is in New Orleans, and much like Taylor Swift, huge NFL fan. Love these events coming in. And I think what's really interesting is last year, there was all this talk about, how, the year it wasn't performing. Everybody had put their homes up on the market in Phoenix, but in the end result, it was only like 48% occupancy. People were really dropping their ADRs. And so this year, we're having a little bit of a different scenario in New Orleans, kind of smaller cities. Phoenix is really those 3 metro areas all spread out. So they did have like a lot of inventory that could be added. And New Orleans is just much smaller. And especially, I think what's unique is if you're in the central business district, the warehouse district, almost all of that is walking distance to the stadium. So everything, that's where all the major hotels are, things like that. So for us, I can only speak to us. We'll do the post-op with Jamie after the Super Bowl, but we have like 1% occupancy right now. There's just like a few units that are left, and it's like for kind of like odd times around the Super Bowl. One interesting thing we noticed is that there's a huge trend of people that are checking out on Sunday, and so I don't know where those people are going, but like a lot, like they're coming in on Thursday and they're leaving on Sunday, and I can't imagine they're coming for anything other than the Super Bowl for that weekend and like willing to pay those prices. And that is, you know, also where things differ is that the ADRs are much better than they were for Phoenix. We're seeing, I mean, ADR around $2,000 across the portfolio and a little bit less, like, you know, 1,700. Still, but, and that's, we have everything. And again, this data is really skewed, and I can, once the Super Bowl passes, I could maybe do some breakdowns, but we have everything from like really tiny studios that are basically hotel rooms, like no kitchen, no nothing, up to 6-bedroom combo units. So you have 6 bedrooms, 4 bathrooms. So that's a huge spread. And it's really interesting to see what people are willing to pay for. And last Super Bowl, booking.com had this like huge offensive with ads, and we saw an immediate uptick in all these booking.com reservations after Super Bowl. And then you see in the final like 2 weeks before Super Bowl, once people's playoff teams are getting eliminated, people are willing to pay anything to come to this game. It is so crazy to me. I love it. But
To find anything.
I mean, some people are willing to pay, you know, like almost $7,000 for 2 nights in a studio. So it's, and obviously I think the key here is like location, because so many of these places are walking distance. And so you don't have to, the Ubers will be crazy. And, you know, if you're staying in the Garden District or Uptown, I mean, beautiful homes and hotels up there, but you're going to have to find an Uber. And something that's interesting that people do for Mardi Gras is like, let's say they get a driver or even their first Uber driver that they get, they'll be like, I'll pay you X amount of money and you are just our driver for today. And so I kind of, if you're going to the Super Bowl, I would suggest maybe and you're not walking distance, I would suggest doing something like that.
Are you suggesting disintermediating Will's favorite business on earth?
I am. I'm saying you should. I'm trying to cut Uber out. Also make sure that you can get the Uber. Make sure that you're basically paying this guy to sit around and wait for you to like hop from place to place. Just a pro tip that someone told me just from spending time in New Orleans. So,
well, if I'm an Uber driver that heard Dara's comments recently about what he expects to be the next decade, which is, you know, autonomous drivers and or driverless cars or autonomous cars, driverless cars, etc. So yeah, get that money if you're an Uber driver. Someone's going to pay you for a day. Cut out the middleman and take that money.
You might be, but like they were saying, people were telling me, oh, you can get like people pay $150 to $250 during Mardi Gras, but Super Bowl money is like different money. It's not Mardi Gras money. It is like
it's FU money,
basically. Yeah, it's like it's just like it doesn't matter what the cost is. So if you are an Uber driver listening to this, go way higher. Find that there's definitely a higher willingness to pay. But I compared this. Oh, sorry. Go ahead.
Yeah, I was going to say, I don't know if you have the number in front of it, but what's like year over year percent look like?
So it's it's interesting because this time last year, Mardi Gras last year was on February 13th. So Mardi Gras is really late this year. It's in March, which has just like, it's really interesting when you're trying to do year over year planning. So we're actually not down, like the change isn't too crazy. I mean, the change in revenue, it's, you know, more than double the revenue for the weekend, but it was incredibly high occupancy, over 80%, because it's the weekend right before Mardi Gras. So everybody's coming in. So usually this time of year is like the high season for New Orleans, but because Mardi Gras is like this moving target, you never know. It's not like apples to apples each year with whatever weekend or week that's going to be in. But I will say the ADR differences are crazy, because the ADR normally for that period is like 460-ish again. And this is like a wide range of products. So, but still it's chunky.
And what is
very
it now?
Chunky.
And now it's like almost 2,000, like 1,700. So,
jeez, yeah, that'll help juice the quarter and probably the year.
Yeah. Oh yeah, for sure. I mean, this is like we had Taylor Swift in October, and what's interesting about cities like New Orleans, like when we had Taylor Swift in Miami, there was a bump, but not like it wasn't month making by any means. But when you have a city like New Orleans, where like when an event comes in like this, it is like totally all encompassing, that's like, it lifts, everybody is making so much money in the city this week.
For sure.
Nice.
And the kind of crazy thing is, I think, is that this does go into a bigger trend, right? And I've seen Skiff come out with this with their mega trends report at the beginning of this year in January, and a few others talking about like experiential travel. And I think even just event travel, right? Like the Taylor Swift boom was kind of a big sign of how much people were really willing to spend. And I think it's a good sign that people are willing to kind of have this FU money experience with Super Bowl or Taylor Swift or their favorite, whatever, like F1 for me. That was my experience where I kind of, overindulge in the spending due to the experience around it. And I think it shows like, I don't know, a good consumer behavior where we're not going towards things, we're going towards experiences and moments. And I think that's a better shift in the consumer spending, at least in America. Versus, going for like the Louis Vuitton bags or going for the little things that are not going to provide that type of memorable experience. It's just going to give you like a little bit of a spending rush. So that's my one comment on there. I think like the event or experiential travel is really positive to see, especially going into this next year under new government and all this other stuff. So yeah, really exciting to see.
Yeah, for a lot of people, the Super Bowl is a once in a lifetime thing. For Chiefs fans, it's definitely not. Those bastards.
When the Bills, I just couldn't, as an upstate New York girly, like grew up watching the Bills lose constantly, and just for them to keep getting so close, it's brutal.
You win some, you lose some. And yeah, just to highlight one more time, Brandy mentioned it, but the difference between this year and Phoenix Scottsdale is pretty massive. So many people missed out on bookings. They tried to jump in too late, price too high. But it's the story of basically 2024. Supply outpaces demand. Even though demand grew, supply grew faster. Therefore, everyone's occupancy went down. But in New Orleans, smaller city, tighter regulations, limited supply, outsized ADRs. So kudos.
Yeah. And so it's also, it's really, when you're trying to sell for these events, it's also interesting. You don't want to like hold out for too long on the hopes that you might get it's really an interesting kind of yield management study. And also, from a guest experience side, you now have all these incredibly like large reservations, even like a smaller reservation. If you booked might still be a couple grand. And, people come in with these expectations that they're going to like, I paid, this many thousands of dollars. Like I want my early check-in or my late checkout. It's like literally everybody paid that much. So you're all like, and we all like, we have more, there's no early check-ins, there's no late checkouts because there are so many back-to-back, like everything is back-to-back on all sides of this. It's crazy.
People are going to take advantage of that.
Yeah. Yeah. Well, I was going to ask Brandy, like with that type of reservation spend, and I don't want to spend too much more time on this topic due to the fact that we have a lot more to cover, but like, what's your guys' mindset when it comes to that type of ADR, spending with guests? Like, how do you enhance the experience to actually make it enjoyable so they don't become the what I like to call the Karens and Bryans of the world, where they demand hand over fist, constant service, constant early stuff, like all the things, right? Like, how do you set that expectation, or how do you guys create a better experience, or how do you guys even think about that? Just kind of a curious question.
The most important thing is that the rooms are cleaned when the guests get in there, and with how many reservations and how many turns, that is the priority. And it's just kind of like at the end of the day, people are still booking this type of accommodation. We don't have like concierge. We don't have that kind of thing. And there's simply like, if people are expecting comped late check-in or early check-in and late checkout, there's simply the fact that like it's not possible because there are reservations coming in. And so we just have like clear mandates from the beginning that like if you want the late checkout or early check-in, you have to buy the day before and the day after to just guarantee it. So it's just kind of about setting that expectation with the guests before that, like, everybody is spending that much, so nobody is that special. We have to make sure that we're providing just the main service they paid for.
Yeah. And if you have unlimited money, like some of these private equity funds are sitting on $3 trillion, there seems to be a spree that travel tech is about to go on. Will, any inputs on Skift's most recent article?
Yeah, moving into what we would call feeding frenzy of the year with M&A and travel tech. I think there's a lot that we've covered around this, and Brandy kind of made comments in our WhatsApp chat over the weekend as we're kind of setting up the agenda for this episode. And it is a reoccurring theme on the show, right? We talk about consolidation. We talk about not just on the brand side, but the tech side, right? There's a lot that's moving and lots that's going on. And kind of even in my prediction in the beginning of the year, there was a lot of capital that flew into technology through, travel, hotels, even short-term rentals, got to see a big chunk of it. But we're still not there, in my opinion, when it comes to tech products. Go ahead.
Yeah, a lot of that capital sitting in private equity is for profitable businesses, well-established, 50, 100 million plus type of businesses. Mm-hmm. And the travel tech landscape is so broad and so narrow, so broad and so not deep that that it's really just venture investable or friends and family investable. And it's the bigger companies that have to provide the exit to the smaller companies, because those niche technologies are never going to get big enough to get to the private equity level. So we're in an interesting place where there is pent up private equity funds. Skift's reporting that private equity across all industries is sitting on $3 trillion. But how much have we reported on this show going into venture into startups? It's been really limited the past 2 or 3 years. So is it a lack of appetite within travel hospitality? Maybe, maybe not. I mean, there's been some big winners through the years. Booking.com has had some really good winners because it used to be Priceline. They bought Booking, and Booking just helped take them to the next level. Airbnb obviously was a home run for everybody involved, but how many softwares and techs out there have hit that mark? We've seen Muse, we've seen Guesty, Hostaway's gotten some huge numbers, and then everything else kind of runs in the ancillary below that. So if you're not attractive to Guesty or Muse, it's going to be potentially hard to get an exit unless you're profitable and in the 50 million plus range. And that's where small cap private equity becomes interesting.
Well, Cloudbeds has gotten into a couple acquisitions, but not as many as Muse. Muse did, 12 since 2019. And that, like you said, Michael, that comment of there's a lot of startups that maybe have received venture capital or friends and family, but there was no big takeaway, 3 or 4, maybe 5 years in outside of Muse using their venture capital to acquire, right? That's a really small example, and who knows what those numbers are. But yeah, like you said, there's just not, I don't know, maybe just not an appetite, because travel tech specifically and travel in general is a very hard business and industry to become this profitable in. Unless you're like Airbnb, where you have 80 million monthly visitors and just insane type of numbers and great strategies behind the scenes to make that money, or to make your money work for you, is really hard. And I think, it's going to lead in, I think we're going to see kind of a period of this private equity, we could be so much more attractive for this type of capital, but no one's really focusing on, in my opinion, the products aren't there when it comes to the user experience, to the ecosystem that's brought bigger to make things better for operators like Brandy, to operators like Nook, right, Michael, as you're looking at your own tech stack for hotels and properties that you guys are going after. So I just think it's really hard when the product's not there. In order for the product to get there, you need the capital, but the capital doesn't want to invest in nonprofit. So I don't know. It's like an endless cycle, it seems.
Yeah, I feel, I saw Simon Lehman made a really interesting point about how our technology still, like the quality of all these integrations is still very low. And I would say like even the best, the best software that we have at this point, it's not like 100% satisfaction. It's not even like close to that. It's, some of the one, some of the best tech in our industry has received a lot of money, but we still have all of these. As a larger operator, you're still cobbling together kind of like the best of each system that you can find, and they might work together. They all claim to have these integrations, but then this seamless flow between all of them doesn't exist. You still have to create all of these like manual back-end workarounds that your team has to do. Mm-hmm. And so you're right, we really haven't reached. And to your point, like you need money to like, there's a lot of tech work that goes, like the technical kind of debt that goes into, improving these products. But it's frustrating. I am for us as a consumer, but then I am for these companies who are trying to raise money. It's also very frustrating. Like we're not of these, like we can't get to where you want us to be without your help, Yeah. So I think to this point, like it takes a certain, you have to have the right partner, the right investor. So the big blue chip firms that might have gone for like an Airbnb raise or something like that is not the investor profile, I'm assuming, for these smaller companies. And I think it's just kind of like dating. You just have to go out and try. And like, eventually you'll find the right match.
Don't remind me about dating. Enough of that. But no, I was going to say like one of these things too about the companies though, like a lot of these products aren't standalone products, or they shouldn't be, right? Like they're more of a feature. The reason why Muse has acquired so many of these companies is because they're a good feature ad. And obviously they're gaining users and some more capital and revenue streams. But like at the end of the day, it's just an easier way for them to add features. A lot of these tech companies should not be standalone products. So that's kind of my big takeaway too, is that we've created a huge ecosystem of stuff that shouldn't be standalone. It should be very much more consolidated. I'll
push back on that. I'll caveat that a little bit. The way big companies add features is by buying small companies. The problem is when those small companies raise venture capital, then their valuation becomes, or expectation from their investors becomes way too high to then be acquired by the big behemoth in the space. And I think that's a lot of where we are right now in travel hospitality, is so many of those feature products, those point solutions, got venture funding, but can't live up to the valuation. And so the investors aren't willing to sell it at 10 million when the valuation was 50 million, and we're just kind of at a stalemate. So they have to innovate their way out of it, add more features to their point feature, basically, and figure out a way to get to a realistic $50 million, then sell to a small cap private equity fund that's just going to kind of juice it another 20% and sell it 5 years later.
Sell it for scraps.
Well, they'll sell it for a profit, but it'll be a shell of what it once was. So I think the ecosystem kind of got broken by this addiction to venture capital from 2017 to 2021. And we're still seeing the effects of that. There's a lot of inside rounds going on. There's not a whole lot of new public, named series rounds going out. But I do think, the lack of private equity highlights the lack of profitability of businesses within the space. And then to piggyback on our journey at Nook of looking at all the different technologies out there, the Nook product that we're developing is kind of a hotel and kind of a community of vacation rentals. So there's studio units, there's 1 bedrooms, there's 2 bedrooms, and we're looking at hotel distribution or hotel PMSs, but they don't really have all the features that make sense to distribute directly to Airbnb or Vrbo. And then we look at the vacation rental ones, and they don't have all the features that Like I looked at one, I won't name it, but it doesn't even have like hotel as a property type to then distribute to Booking or Airbnb or whoever, Expedia. So how some of these big players don't have some of the basic features to bleed into the other markets, I don't get. But that's and then how all the softwares fold into it is just a giant jigsaw puzzle. And I know you've been through it 3 or 4 times, Brandy, but you might have a point solution that you absolutely love, and you have a PMS that you really like, but guess what? Those two don't talk. Or you have a PMS that you love, but they don't have a direct 2-way integration to Airbnb, and now you have to go through a third-party channel manager, and that's more costs layered into the cycle. So
yeah. And you know, something like a year ago when we were talking about, or, you know, in the last couple of years, it's been like, do you buy the all-in-one package and like kind of have less choice, but everything is going to work together? That's like in your PMS. And I think Guesty is really leading the charge on like adding all these new products, or are you kind of like assembling your own and creating your own perfect tech stack? And I have always been in favor, if you are an enterprise client, of building the tech stack that really works for you. And I still maintain that, with the caveat of like, as like if Guesty continues to improve on their products and they can do it better than that solution that I'm using, I will 100% jump, because it just makes things work. Like the seamlessness of working together is so like, it just reduces so many other friction points throughout the experience. But I think you see a lot of these other smaller kind of feature companies becoming one and the same. Like someone was checking and just doing check-in instructions or just doing locks, but then now they're doing both of those things and they're adding task man. Like they're all just becoming different versions of the same company.
100%. Yeah, all really good points, and it is a little chaotic. I think there's just a lot going into it, and you have to become now this like professional of tech in some shape or form just to operate a simple short-term rental or a urban property or hotel. So it's going to be really interesting to see what happens this year. I would love to see some private equity come into the space versus venture capital. But, you know, Michael, I think you summed it up perfectly, that we're still seeing the effect of 2017 to 2021. So yeah, it's going to be really interesting to watch. And the last story of the day is Inspirato kind of shaking things up and getting into property management. So Michael is the one that brought this up in our group chat. So why don't you share some insights on what you think?
Well, a couple things happening at one time. Luxury is a very hot space within the segment. It's the only space that's grown, that's been profitable, that hasn't taken losses on ADRs or occupancy. And then Inspirato did the SPAC IPO like Sonder, about the same time as Sonder and Vacasa. And, you know, if your peers that in travel that went public at the same time as you, or Sonder and Vacasa, you don't have two shining stars to kind of peg yourself against. So it makes a lot of sense to try and find other avenues. They already have kind of this web of super high-end homes globally, part of their vacation membership. But, you know, adding and monetizing management fees on top of that makes sense. I don't know how, as we've seen from any global operator, it's going to be hard to manage vacation homes worldwide without any specific depth in markets. So maybe Inspirato uses some of their cash to go buy really good high-end local management companies and goes deep in certain markets. But I think it's going to be a big uphill battle if they're going to try and go global and manage these properties.
Density is the way.
There's a reason why Romy's only in Miami and New Orleans, right?
Mm-hmm.
Yeah.
But density. They do. I will say, I was looking at the Inspirato website earlier, and they have some baller homes. So it's at least there's that.
Luxury can be profitable. And I don't know their commission rate. I mean, if they're doing high-end homes and taking 35%, then it's going to be hard to mess up, but you can still mess up. So good luck to them. Good luck to all those in the luxury space. This might be an exit for you, an exit opportunity. But this kind of goes back to the travel hospitality space in my mind is a really tight-knit group. But there's outliers. There's people that you don't want to hang out with, or you don't respect, or you don't like. But if you have this mindset of zero sum or scorched earth, you're not going to get terribly far in the space, because you're going to run into a time that you want to sell or that you want to buy somebody. And if you don't have a good reputation that goes along with it, you're going to be stuck kind of on an island by yourself. So be involved in the industry, be involved in the community. It's a great community. 95% of people are awesome. And those 5% on the island by themselves can shove it.
Yeah, be in their own echo chambers. Yeah, really good stuff. I have nothing really to add outside of that. What do you got, Brandy?
Oh yeah, I was just wanting to, that kind of separate from Inspirato, but I had my like crazy guest incident of the week that I mentioned to you guys. We've had like a real couple months of guests just like doing serious damage to properties, whether it was floods, fires. I mean, it's just been a whole gamut of stuff that makes me go crazy. But the one that was just so petty was someone cut all of the cords to every single appliance when they checked out of a unit this weekend, just like with the scissors. And it's just like, why? And it's all easy. Like, it's also like we can get a new coffee maker, toaster, just go through and replace it all. But like, that's just like another headache. And yeah, don't do that. Don't do that.
I've heard of some crazy things, but I've never heard of scissors to all the appliances. That's pretty wild.
And like, they didn't have it. We looked back through their stay, like nothing of note, like just kind of checked in, checked out. And then on the way out, just snip, snip, snip. And
do they do it to like the stove and all, like the
no,
microwave appliance?
Not like the big,
like
the countertop appliances, the TV, that kind of thing. No, if they had taken the stove out, yeah, I would have been pissed.
Yeah, I was like, man, they pulled it. Like, they really, really were upset if they pulled the stove out to cut the cord and do all that stuff. And as Paul says right here, this is why we can't have nice things. So totally agree. Totally agree, Paul. Well, lovely episode. Before we wrap up, what do you guys got going on this week? Anything fun, exciting, notable?
Just helping the NOLA team prep for Super Bowl. Just keeping everybody calm.
Working on entitlements with the local county. So add that.
Look at you getting involved. Nice. Love that.
To the bingo board I didn't foresee.
Lovely. Well, good stuff. Great to always see you guys on this beautiful, beautiful Monday morning. For all of our live viewers, shout out to you. And of course, for our listeners, you know what exactly to do. You like and subscribe, go to goodmorninghospitality.com, sign up for our newsletter, maybe listen to our other shows like Good Morning Europe and Good Morning Hotels, aka our other episodes that are on the same feed. Like always, we'll see you guys again on Monday.